So today we are doing a Trading212 Portfolio update, so let's go. As you may or may not know, the markets have been kicking off this week. They've been plummeting, basically not ideal. On Monday, the S&P 500 fell 1.7% overall, and it got to lows of minus 2.4%, which is not massive, but in one day, it is quite massive. And it did recover most of the losses by the end of the day, so not so bad. A lot of people obviously took my lovely advice and when it drops, put some more money in. But the reason it dropped so much was because of Evergrande, or Evergrande. Who knows? This company is one of the biggest real estate investment companies in
China.
And their share price dropped significantly all the way down to 2010 levels for them, which is not great for them. And this sort of was a catalyst for the whole market to be a bit fearful. And the reason for that is that this company has debt up to its eyeballs and it is one of the biggest companies in China, one of their biggest contributors to GDP. And because it's got loads of debt, if it cannot pay this debt back, then
China
is going to have a real problem. They're going to be up the creek with no paddle, or up shit's creek. Yeah, I don't know. And the drop in the market reflected this fear that this could happen. So let's jump into Trading212 and let's see how this affected my portfolio. But first, make sure you get your free share from either Trading212, Free Trade, Stake, CoinBase. All of them are in the link in the description. So go downstairs and make use of these very good offers. So my portfolio did take a bit of a hit on Monday. As you can see sort of see it dropping down a fair bit pretty quickly on Monday. And then it didn't really recover on Monday for me very much. But when I did see the panic online on Monday, I was like, this is a great time to invest. Because as Warren Buffett says, when everyone is greedy, be fearful. And when everyone is fearful, be greedy. So I was greedy. And I put in 150 quid on Monday and it sort of balanced me out already. So eyes on the prize. And that meant that my portfolio is bigger and better than before. So win-win-win for me. But of course, there's always going to be some losers in my portfolio, and I'm not as perfect as my mum tells me. So sometimes I do have to have a reality check, and this is now. So first off, we have to scroll down all the way to the bottom and look at Zoom. So Zoom is unfortunately down 23%, and overall since it started was up 348%. So I've obviously bought in at a terrible time, but that doesn't matter. It's going to be okay. So it's not ideal, but I am quietly confident in Zoom, and here's why. I've said this before, but nobody is saying, oh, let's FaceTime, let's Microsoft Teams. They're saying, oh, should we have a Zoom call? So it's sort of a change in mindset. You know how when we used to be like, oh, should we just look it up? Now you say, shall we Google it? When a company becomes a verb, then you know you are on the right track. So Zoom, for me, is the new sort of Google of that part of technology. I personally think their product is superior to Microsoft Teams and FaceTime, and not to mention their financials are in tip-top shape. They have some solid margins, and their profit margin is insane in comparison to some other products and some other companies, and also they've got a very strong cash position, easy for me to say, and some serious control of their cash, so perfect in my book. However, their stock did have a COVID boom, in my opinion, where everyone was like, oh, let's chuck money in Zoom because everyone's using Zoom. So their stock price rocketed. And I think people were sort of going in for, oh, this will be rising and then we'll sell off as the pandemic sort of finishes. And I think that's kind of what's happening. So in terms of valuation, it is quite high in terms of a stock price. And if you go into genuine impact, you can see that the value is very expensive. So the income statement, balance sheet and cash flow, all compared to the rest of the market, is very expensive. And that just shows it could be overvalued. However, for me, it's an opportunity to cost average down. So as the price potentially continues to go down, I can cost average in, reduce my overall cost average, and hopefully over a long period of time, Zoom will become another winner, and long-term growth is the key. So we'll see. And I'll link a quality article about Zoom and its future from Forbes down in the description if you want to read that. I've completely smashed my phone. Not ideal. Wear protection, kids. Other than Zoom, all of my other losers are fairly non-material, and I know that's an accounting term, but it basically means it doesn't really affect my overall portfolio, so I'm fairly happy. And obviously I will show you my notable losers, so let's get into that. So we've got ABBV, we've got AT&T, we've got CoinBase, which is only a little bit down, Dolby, which is a fair bit down. What else have we got? We've got Phoenix, Roku, Spotify, Surface Oncology, Unilever, the FTSE All World High, which I bought fairly recently, Verizon, a little bit, and then of course Zoom, which we mentioned earlier. So there's a fair bit of red. It's about half and half, but luckily my green is doing better than my red. So that's what we like to hear. But how are we all doing? How are you doing? Are you green? Are you red? Let me know in the comments and let's chat about it. Now, before we get into the winners, I just want to talk about a tool that I've been using to analyse my stocks and analyse my portfolio. And I mentioned it briefly earlier, which is Genuine Impact. I've done a few videos on Genuine Impact and they're kindly sponsoring this section of video, so thank you to them. I use them to research any new stocks that I'm adding to my portfolio and check up on my own portfolio at the moment, because you can actually add your portfolio in there. So as you can see my Trading212 portfolio in here. And if we click on that, and we can see my performance of my Trading212 portfolio against the rest of the markets. My favorite feature that I'm using at the moment is the stock and fund look through. So as you can see, it shows you what company you're invested in most. So this includes what your actual investment is and if you're in any ETFs as well. So as you can see, it says I am 8% into Apple. So it shows I'm really backing Apple, and that's quite a good thing to know, because if you're investing in ETFs as well, they have different weightings on different companies. So it's a really good idea to look at this and see if you're overexposed in one. So luckily, Apple's 8%, not too much. If it was over 10%, then I might have to dial back a little bit, but I think that's perfect for me. So if you do want to try Genuine Impact for free, then you get a free 30-day trial if you use the link in the description. So go for it and let me know what you think. And speaking of Apple being my top holding, it's actually one of my best performing holdings too. So that's pretty good. So let's have a look. So we're at Apple, we're $1,000 in and we're 37% up. So that's what we like to see. I've said that so many times. Jeez. But this was actually one of my first investments that I ever made, and I'm quite happy with how it's turned out. And to be honest, I don't see it stopping. I really like the Apple products and I like their ecosystem, so I'm going to continue investing into them, and hopefully I will put some protection on my phone, and then I won't have to keep giving them too much money, if you know what I mean. Hopefully they'll pay me more than I pay them in dividends, you know? We'll see. But you do have to remember that all of these gains are past gains. So you've got to remember to do your own research before investing your capital, because you unfortunately are unlikely to get the same results if you invested in the same, because it's just a different time period. So it's really important to make sure that you are confident and you understand what you are investing in before you invest in it, even if it's just an S&P 500 tracker fund. You want to be as confident as possible in that. And speaking of the S&P 500, that's my next holding. So my second biggest win is my VUSA, so the Vanguard S&P 500 ETF, and we're up 46%. So that is very tasty, almost 10 or 9.5k in there. And you can see the average price that I bought at is very low in comparison, so very good. But as you can see, the dotted line where I invested in, why am I showing you there? You can see on here, is literally when the COVID crash happened. So I did invest at a very good time, and I was very fortunate that it didn't continue to drop because of COVID. So a bit of luck, a bit of fortune, and now we're here. But it does show that you don't need to invest in loads of companies for massive big wins. You can invest in a broad market and get a very decent result. And my top performing holding at the moment is Wells Fargo, actually. So that's pretty good. We're up 48%, which is quality, because they took ages to recover from the COVID bubble, and I didn't think they would, to be honest. So I sort of took the foot off the gas with Wells Fargo, and errors were made. However, we're still here. We're looking good right now, so can't complain too much. And next up we have Disney, which is up 43%, which I am loving, because when I initially bought in, it was a Disney stock. It was a good stock to hold, and now it is not a dividend stock. They've taken a dividend off to reinvest back into streaming and back into the business, and it's working. And I do think that Disney will take over subscribers from Netflix, and that'll be a mad day, and Disney will just be aiming for the moon. So fingers crossed that goes. And now obviously some other notable mentions. We'll just have a quick look down. Airbnb up 12%, Alphabet up 37%, so thank you YouTube, doing me a solid there. Amazon up 1%, nothing amazing there. Apple we've talked about. Bank of Montreal up 24%. Coca-Cola up 6%. Deliveroo doing nothing. There's barely anything in there either, so not really a talking point. The FTSE 100 up 10%. Legal and General up 7%. Netflix 13%. PayPal not really very much. Shopify up 20%. That's pretty decent. The S&P UK dividend up 8%, which is good because it's a dividend ETF. So for it to be up that much, I'm pretty happy with that. Square up 15%. Starbucks 9%. Tesla 25%. We all have a bit of Tesla. Elon Musk is the man. And what else have we got here? And then we've got the Holy Trinity, which is the S&P 500 VUSA, Disney and Wells Fargo, absolutely smashing it out of the park and making me lots of money. So can't complain. So all of these are really good, but my whole portfolio is being carried by you smashing that like button. So please do that now, please. But seriously, my portfolio is looking fairly good. We're at 20,600, invested 16 grand, and we're looking good, up 26% overall. And the best thing to come out of this today is that if I decided not to invest ever again and just left this and just sat back and relaxed until I was 65, I would potentially have around 450k left in this account because of compounding if it returned an average rate of return of 8%, which is slightly less than what the S&P 500 has returned for the whole time it's been around. So that is crazy, and it just shows that time is money and compounding is the real way to make wealth grow over a long period of time. So of course I will not stop investing right now because I want a lot more money in the bank account so that I can live off my investments, and I will continue to invest around 150 quid a month until I can boost my income a little bit from my little business and hopefully get to the point where I can invest £1,666 every single month in order to max out my ISA benefit. So let's hope we can get to that and then hopefully invest even more, and we'll just see how that goes. And anyway, a quick look at my pies. We're all in green. We're 6% with my ARK Invest, 4% with my Pie Felicia, and 29% with my Slow and Steady Wins the Race or Millionaire Pie. So fingers crossed they continue to grow nicely. And that's about it from me. Get your free stocks down in the description. And I'm not a millionaire, but I'm trying to help you become one. So peace.